Namaskar, good morning. Welcome to Market Today on Business Today Television. I am Shail Bhatnagar, joining you from New Delhi on what is going to be a fantastic morning for stocks on Dalal Street. All cues that you could think of are positive, including the GIFT Nifty. So tighten your seatbelts and wait for a gap up open on the Nifty, which has already at a record high crossing 20,000 points in Monday's trade. More and a lot more, but after these headlines. India's Goldilocks rally is likely to continue, with the Nifty consolidating above the record 20,000 mark on Tuesday. Cues coming in from Wall Street and GIFT Nifty remain positive. They point to a gap up opening. Bullish traders remain on the driver's seat at Dalal Street. And there is more news coming in for Reliance Retail, with global investment firm KKR investing 2,070 crore rupees into Reliance Industries Limited's subsidiary for an additional 0.25% stake in Reliance Retail. This investment values the unlisted retail giant at a pre-money equity valuation of 8,36,100 crore rupees. Good morning, ladies and gentlemen. Welcome to Market Today and to Business Today Television. In front of you is the daily graph of the Nifty, and you've seen this fantastic rally after the successful completion of the G20 summit, taking the Nifty to a record high in yesterday's trade. All, of course, there was a very smart rally all of last week, and we seem to be getting ready for another bump up with a gap up open as indicated by the GIFT Nifty. Fairly shortly you'll see this daily graph of the Nifty hitting your screens. Yes, that's it. So that's a record high. We had earlier seen a shave below 20,000 on July 21st, and it's taken the Nifty about 1.5 months to scale that level, and from now on you are probably going to see better days ahead. 20,100 seems to be on the chart, with a gap up which is visible of 90 points on GIFT Nifty, as also the options data, which shows fairly consistent moves in terms of how put and call ratios are in the scene. This is the 6th day of the rally, so one has to be really cautious. If one is already invested, keep your stop losses fairly close to the current market price, and this is probably not the time to enter the index at current levels, but if you have invested, it makes sense to continue riding this bull run. And remember, instead of weekly options, try the monthly September 28th options on the Nifty and the Bank Nifty, because that is where you'll get more comfort. Obviously, bulls retain the upper hand on the Nifty, and the Bank Nifty is likely to follow suit. Liquidity in the Nifty and both the major indices is, of course, increasing dramatically, and we hope that you'll see more traction coming in. And of course, there is an intense short covering that's coming on Nifty ITM calls. I'm requesting the PCR to show a new set of data that we are trying to get in front of you. It shows extreme short covering when it comes to the bears in the Nifty option chain, and it shows how shorts are being covered, and that actually is also fueling sentiment on both the Nifty and Dalal Street. This is also visible in Bank Nifty, but that will take a while. Now, what is likely to happen? Of course, PSU stocks, you will see very strong rallies continuing in the defense space. This is the new options chain that I was talking about. See the strike calls between 19,500, 600, 700 and 800. You will see how open interest has decreased very substantially, with a very sharp increase in the value of these calls. That basically shows that the bears are on our back foot and the trend is bullish. Well, coming back to the broader market, you'll see very strong rallies coming into railway stocks, then defense. Of course, these remain the top draw. You have to be really very careful. Extreme caution is continuously advised for retailers. If you are already into such stocks, keep your stop loss fairly close to the current market price, just in case the market turns for the worse. Then it's the market that gives you an exit, because your stop loss is fairly close to the current market price, and you of course save the profit part which is there. But this is the rally to be ridden as far as the Nifty and the Bank Nifty is concerned. And as I mentioned, if you see the options chain, there is extremely strong support coming in at 19,800 levels on the Nifty, and of course the fresh resistance is at 2,100, which we will seem likely to open at given the gap up that's happening. So if you are long on Nifty, that would possibly a place where you book at least a decent amount of percentage profit at 2,100, wait for the Nifty to cool off, and then again buy on dips. So this is what the Nifty is looking at. And of course, coming back to the Bank Nifty, see, I'm sure sensible traders would be paying more attention to Bank Nifty, because it is still not hit a record high, 800 points away, but the mojo is back. If you see yesterday's rise, about 445 points were added to Bank Nifty, and of course the index also closed at the day's high. This is the daily chart of the Nifty Bank, and you see how the trend has strengthened over the last 2 or 3 working sessions. We've seen now the 20, the 10 and the 8 EMA providing support to the Bank Nifty at current levels. The part that is likely to move are 2 banks, of course the largest bank, State Bank of India and HDFC Bank. We've seen some short covering happening on HDFC Bank as of Monday's trade, and of course SBI is looking dramatically good on the charts. However, I'm requesting the PCR to show the Nifty PSU banking monthly chart. It will take a while to come in front of the screen. That index actually shot up into record territory yesterday. So the breakout on that index is very strong, and you see very strong moves coming into stocks such as Bank of Baroda, Canara Bank, coupled with a very sharp burst in volume. This is the Nifty PSU banking index in front of you. Remember, this is the monthly chart, and it's broken out into fresh record high territory yesterday, and this is likely to continue given the momentum that you see in Canara, Bank of Baroda, of course the smaller ones, Bank of Maharashtra, of course Indian Bank, Central Bank of India, J&K Bank. So that part of the rally remains unscathed, simply because relative valuations there compared with the broader market are still in the inexpensive range. So PSU banks are likely to move. Of course, railway and defense stocks will remain the top draw, and of course you'll see a broader rally in the wider PSU space, such as we've seen stocks like MMTC firing up, so on and so forth. Coming back to the Bank Nifty options chain, again you see this very strong short covering happening in 45, 600, 700, 800, 900 and 45,000 calls. See the dramatic drop in open interest in front of you, and this is accompanied by a surge in the price of such calls. So when ITM calls show extreme short covering, that's an extremely bullish sign for the market. As far as the range is concerned, it's shifted upwards for Bank Nifty to 45,500, emerging as a very strong support, and we are marching onwards to 46,000 as far as the Bank Nifty is concerned. It's got its mojo back, a 1-year high on Bank Nifty, and that's where markets are seen as far as major indices are concerned. Remember, if it's a gap up, it's always good to book some profit. Keep your stop loss very close to your current market price if you are invested, because you need to protect your profit. This is not for the faint-hearted. If you're not a professional trader, it's best to concentrate on cash shares. Well, this is as far as both the major indices are concerned. Now let's shift focus and see where a lot of traction is coming in. Mr. G. Chokalingam has joined us. Before we get in touch with him, let's look at a couple of stocks which are showing a very strong traction when it comes to the futures and options space. We'll remain glued to the banking space simply because that's where good traction seems to be coming on the long side. And I'll request the PCR to fire the chart of City Union Bank. I had highlighted this stock a couple of days as well earlier, and you see a 2.5% rise in open interest when it comes to City Union Bank. It's accompanied by a fairly decent uptick of 2.3% when it comes to price, 136.25. Very, very strong technical charts there. Remember, this is all data. You need to also have a financial advising view from a financial advisor should you like City Union Bank. This is one of those very rare stocks which is still below 200 DMA, and the all-time high is somewhere in the range of 200. So good margin of safety when it comes to the price point. Again, coming back to Bank of Baroda. This has again climbed above the 200 mark. Remember, the Nifty PSU banking index is at a record high, driven by smaller PSU banks, but this was a market darling, and this is again coming back into circulation. Very, very strong move there yesterday, 2.7% higher, accompanied by a drop in open interest, which means that shorts are getting exhausted from the system, and that again will propel the stock higher to 103.65, a market lot of 5,850 shares on the F&O space. And finally, a blowout performance by Adani Ports yesterday. If you were with us yesterday, I had pointed this stock out pre-market. I think it was the top gainer in the Nifty space, 7.5% higher, accompanied by a 2% rise in open interest. Again, a fresh record high here. So these are the three stocks that look good on technical charts based purely on data. Please also consult your own advisor should you be looking to take a position in this on the long and the short side. Okay, let's get to our guest. Mr. G. Chokalingam joins us. He's the founder and managing director of Equinomics Research, a man with a very, very sharp intellect, and he has spent more than 3 decades in the market analyzing stocks. Mr. Chokalingam, namaskar. Welcome to Business Today Television and Market Today. What a great time to be in markets. How do you feel? How do you think sentiment is on Dalal Street according to you?
Sentiment is extremely good, very rare to see. In the last 30 years, this kind of bull run has happened maybe 3 to 5 times. But that also gives quite a good amount of fear. Because if you look back last 15 years or 20 years, the small and mid cap indices have invariably fallen very badly after every major rise. So therefore, while on one hand I am feeling so happy about the market condition, on the other hand I am highly nervous about bubbles in small and mid cap indices.
Okay, Mr. Chokalingam, you've hit the nail on the head. This was my next question. We've seen a very, how should I say, contrarian report coming in the market yesterday by a gentleman whom both of us respect a lot, from Kotak Securities Institutional Research, that the rally is done. Valuations are way above logical levels in the mid cap and the small cap space, and they've taken away their portfolio, saying that enough is enough, let's shift to cash. What is your view? Do you think markets are overheated, or being a cautious person, the gentleman who wrote that report, he's withdrawn money? What's your view?
I appreciate him. Really, it's a bold view, and coming from the institutional broking house, it also shows the commitment to the investors, not worried about broking revenue. Only to a large extent I agree, but then only one small additional point I would make. Yes, there is a huge fear on the small and mid cap, but there is no fear on overall Sensex or Nifty, because the Sensex and Nifty have hardly gone up 9 to 10%, in the current financial year, whereas small cap indices have gone up by 4 times the rise in the Sensex or Nifty. So, considering the fact that India is going to have a fastest GDP growth among major economies, and many other medium to long term factors are positive, I am not too much worried on the Sensex or Nifty. It might best, or in the worst case, it might correct 3 to 5%. not beyond that. That also I doubt whether it can be beyond 3-4%. But the small cap only is a problem, and also some small mid cap segment is a problematic area, because more than 300 promoters have sold the shares in the market. We have seen the media reports. Loss-making companies are coming to the markets with the rights issue. Otherwise, it would have been very difficult for them. A lot of jewelry and real estate companies, I'm not doubting all of them, but some of them have difficulty in mobilizing funds, but they find it very easy to come to IPO market and mobilize. And then almost every day there is one IPO opening and shooting up 95%. So what I'm trying to say is that the liquidity is slowly drained out of the secondary market. It is going for different purposes, different objectives. And this is what invariably happened in the last 20, 30 years, starting from 92 boom, 91, 92 boom. The major fall in the small and mid cap followed the major bull run in the IPO market. So therefore, this segment is a problematic. However, one area where I differ is that whatever is the condition of market, whether it is a corona time or whether it is a dot-com time or it is post-Lehman crisis, some of the small and mid-cap stocks always give excellent opportunity to buy and hold. So therefore, yes, 70 to 80% of the small and mid caps are untouchables in terms of the valuations or valuation bubble, but certainly there are some opportunities. But of course, it would be difficult for individual investors to find out. And also, when there is a meltdown, even these stocks might fall marginally, but then this could be an opportunity. So therefore, I would say that overall small and mid cap, one as a part of my research strategy, that one should reduce the exposure to almost 30% of the equity asset allocation, not more than 30% for small and mid cap. That too only for high quality stocks in terms of the management quality, balance sheet quality, valuation, business model, the track record on what they say and what they achieve. All these one has to see and then stay invested. Otherwise, balance 70% should go for cash generation, gold ETF, and at least 50% for large cap or Sensex and Nifty, or top 100 or top 200 stocks.
Wonderful. That's a fabulous asset allocation that Mr. Chokkalingam has given to us. And remember, the meat of the matter is often in asset allocation, depending upon how the animal in the market is resting. Mr. Chokkalingam, if I force you to find value in this market, given the fact that every other index except the Bank Nifty is now at a record high, where would you put your money if it's a question of buying a couple of stocks, or would you just stick to the mutual fund route?
Mutual fund route is for the retail investors who do not understand the risk in the equity. Obviously, professional investors should go always for the direct equity. So I would never recommend a mutual fund. Being a professional, that doesn't, if I recommend, that means I have doubt in my own capability. Now, for investors, what I would suggest is that, in large cap, I still find a great opportunity in Reliance Industries. I continue to say that Reliance Industries is emerging as a mini economy, and the stock can double in 3 to 4 years from the current level after adjusting for the rewards given to shareholders in terms of Geo Financial Services. That is a one stock. And second, one can, on decline by Maruti. And third, HDFC Bank. Though the banking credit growth has slipped down from 16% to around 14% now, I believe HDFC Bank would be a dependable Sensex stock. So these are the some of the stock. Among these, HDFC and Reliance is the best to stock. And then in IT sector, one or two top names one can invest, because if market were to fall, particularly small and mid cap, or even the whole market correct, the rupee would come under more pressures. And of course, goods export numbers are yet to come. I believe that the deceleration in absolute term of our goods export might continue for August as well. So all that can give some stress on the rupee exchange rate. That would be ultimately positive for large IT stocks. So these are some of the names one can consider for time being. And in the small cap, we have given a buy call on Mindtech. I find a lot of value. Why not participated in the current small mid cap rally in a big way? So that could be another strategy for the retail investors. Look at some of the small cap, mid cap stocks still not participated in the rally, but there is a lot of value in it. So these are some of the stocks, and also,
Right.
Yeah, also Coal India and Oil India. We have
So,
yes.
Okay, let's just recap the list of stocks that Mr. Chokalingam has mentioned. Given the fact that the rally is almost as fresh in Nifty as is the flower growing in your flower bed in the garden. It's just 5 days old, and better days are of course expected on blue chips relative to mid caps, because the outperformance of mid caps has been phenomenal. On an index level, the Nifty is up about 9% year to date, which is 1% a month, which is simply mathematical. But the small cap and the mid cap index have shot up 28%, 29% over the last 9 months or so. So this catch up trade is most likely to happen on the Nifty, and he mentions fabulous stocks. I'll remember this for a while, Mr. Chokalingam, that Reliance Industries is a mini economy in itself. So Reliance, HDFC Bank, of course, Coal India, Oil India is what Mr. Chokalingam prefers, because they still haven't seen record highs which the broader markets have. Just a good time as any to welcome Mr. Kiran Jani. He's the head of technical research, Jainam Broking, on the show Market Today. Welcome, Kiran. Good morning. What a fabulous day to be in markets. What is your view on the Nifty? We seem to have a gap up today in trade. 92 points higher is the first cue coming in from Gift Nifty. How do you see the market at current level?
Very good morning, everyone. So overall, we have seen a fantastic rally since market has made a very good bottom. If I talk about Nifty 19,200, now we are trading at 20,000, a remarkable and psychological mark where everyone were waiting since last couple of months. Now at current juncture, we are seeing that the significant amount of open interest at current juncture on Nifty. Looking at PCI ratio is 1.43, completely in bullish grip. And today also we are seeing some gap up opening is happening on looking at Gift Nifty. Now considering again options data, looking at put writers, 2,84,000 lots are holding by them. So it's clearly showing that the grip is very good from the bull side. If in case any dip is coming, it's an opportunity to enter into the market. So if any gap up is opening, I refuse to take part or maybe chase this rally. Let's wait for market to give a good dip somewhere around 19,800 to 19,750 on Nifty. That would be the great dip and buy opportunity for the Nifty. Coming to the Bank Nifty showcasing underperformance considering the Nifty. Reason being, in Nifty we are seeing that rally is coming from pharma, rally is coming from IT and other sectorial, whereas the Bank Nifty is underperformance. Reason being, we have seen a divided performance in private bank and PSU bank. However, since couple of days, we are seeing that all private banks and PSU bank together it start giving a fresh breakout. So considering that, we are seeing that Bank Nifty can showcase their color, and we can see a sharp rally in Bank Nifty. So aggressive call on Bank Nifty we are recommending. Any day for even at current market price at 45,500, we are recommending go long on Bank Nifty for the target of 46,000, and stop loss would be 45,250.
Fine. So Bank Nifty is more preferable to professional traders, and this is in sync with my view as well, simply because we haven't seen a record high on Bank Nifty, and that's 800 points away. Still time for pre-open trades, about 4 minutes. We'll stick with Kiran. Kiran, any stocks that catch your attention in the futures space on the long side, which you might take a punt on?
Yes, so we are recommending two trades actually, one from pharma and another from the Bank Nifty space, or I can say banking space. So first is the Glenmark. If you check the daily chart, we can see a clearly rounding bottom pattern. There was a multiple resistance was somewhere around 800 level. Yesterday, the stock price has closed above 800. 810 was the settlement price. Looking at the derivative data, as you mentioned, since last 5 days, we are seeing 80% open interest rise, 6% price is also rise. That's clearly a long built up stock. So Glenmark at current market price, we are recommending buy for the target of 824 for the intraday purpose, and stop loss would be at 799. So Glenmark is our first preferred pick in pharma. Another stock is IndusInd Bank. As I mentioned earlier, that in private bank we are seeing a good performance is coming. Fresh breakouts are also coming. IndusInd Bank has given a great breakout on the daily chart. We can see the ascending triangle pattern breakout is coming. Similarly, on intraday charts, if we check IndusInd Bank, there is a triple bottom pattern is also given a very good breakout. So above 1450 level is the breakout level. Yesterday closing is exactly at 1450. So we are recommending go long on IndusInd Bank for the target of 1470, and target the stop loss would be 1434. So pharma and banking would be the flavor for the day.
Okay. And a relatively mid-sized bank, IndusInd, as well as Glenmark. Remember, there was a blowout trade in yesterday's market when it came to Aurobindo Pharma and Glenmark. For the moment, we've just seen a 16-point uptick coming in from GIFT Nifty, which was about 92 points earlier, but that's how it is. 20,117 is what looks like when it comes to futures Nifty at GIFT City. Okay. This is as far as technical calls and view on the Nifty and Bank Nifty is concerned. Coming back to Mr. Chokalingam, sir, anything that you think catches your fancy in sectors such as pharma and cement, given the fact that they are still, relatively haven't moved as sharply as the other sectors have? Pharma and cement, sir.
Yeah, cement, I am not convinced to go aggressively and buy. They have already rallied, and also the volume growth is in poor single digit. And let us not forget the fact that so many players have proposed to expand their capacity. As you said, I've been in the market for 30 years. We used to see cement capacity expansion in lakhs of tons in 90s, even in early 2000 years. But now everybody talks in terms of double-digit, million tons, or a very high single-digit million tons of expansion of cement capacity, whereas the industry already at around 70% capacity utilization. So I'm a little nervous on medium perspective of cement industry because of this huge capacity expansion. But yes, pharma one can continue to hold Cipla. One can consider buying Dr. Reddy. Little risk-taking investors, risk-taking only because of my fear on the small cap. One can consider buying Indoco Remedies. It has not participated in the rally. It is very close to 52-week low. And I looked at the business profile. Roughly 55% of the business is domestic formulation and balance export. So this looks very attractive, Indoco Remedies.
Right. So we'll pay attention to pre-open trade for a while. The Nifty opens flat ahead, just a whisker above 20,000, 7 points higher. What are the stocks that are breathing into the green side? L&T. There's no stopping this, 2% higher, 29.55. Let's look at what Reliance is doing. Flat, 24.75. What's Infosys doing? Flat, 14.76. Strangely, we have a fairly sharp downtick on HDFC Bank. I'm sure this is going to settle for the better. 0.7% lower. Yes, this is far better. 16.20. And immediately, there is an uptick on Nifty, 70 points higher, 20,065. Remember, there's a very, very strong resistance both on the charts as well as the options table when it comes to Nifty at 20,100. So that's what is happening. What else? Let's look at ICICI Bank. There is news coming in that the present incumbent has got a 3-year extension to remain in the CMD desk. 0.7% higher, 985. Axis Bank flat, 1,000. We've seen 4 digits headed for record high. How about TCS? 0.2% higher, 34.89. Let's also pay attention to broader markets. I am shifting base to futures and options. Let's see which is the top gainer. Another PSU share, this time ITI Limited. They came up with an announcement yesterday about unveiling two products. The stock up 10%, 164.45. There is no let up in the rally in railway stocks. IRFC was up 10% yesterday. It's up 10% today. 93 at pre-open trades. This is a fresh record high. SGVN hit 20% circuit yesterday, up 7% today, 82.35, fresh record high. RVNL 3.5% higher, 196, fresh record high. What else is moving in the green? IDFC First Bank 2% higher, 98.80. Indian Overseas Bank 3% higher, 35.95. Let's also look at the F&O space, dominated by PSUs. Power Grid top gainer, 5% higher, 208.20. L&T taking it away, 2.5% higher, 29.30. They've raised the price of their buyback by about 200 rupees to 3,200. L&T Housing Finance 1.76% higher, 133. I have just seen a block deal happening on this counter. I will update the price action a little later, but that's what is happening. What's on the losers side when it comes to F&O? Nothing much to be worried about. In fact, of the 170 stocks that are there in the F&O space, barely 20 are down, and the level percentage is nothing to be worried about. Laurus Labs top loser, 0.5% down at 405. So the rally remains firmly in place. 20,069 on the Nifty, 75 points higher. Coming to Kiran immediately. Kiran, a very nice move, and you've said you won't be chasing it. So that's how the stock is. That's how the index is. Any favorites in the PSU banking pack? We've seen their index, the Nifty PSU banking index, hitting a record high yesterday. What are the charts telling you?
So as of now, as I said that on Nifty, whatever the gap up is coming, we are not supposed to chase. But as you asked very correctly, that we should look at the PSU bank sector entirely. We have recently seen a very good rally. After that rally, the stock prices are into the time correction zones, and at multiple charts, we can see a big breakouts. So our first pick is Indian Bank. Considering the Indian Bank daily chart, you can see a fairly a bullish setup. Stock price has taken a support at 20 days moving average. Recently on daily chart or even intraday charts, the prices has formed a rectangle pattern, and now the prices has given a breakout yesterday from that rectangle pattern. And look at the volume. Its volume is significantly high yesterday and crossing its 20 days average volume. So considering all this pattern, Indian Bank looking very good. Current price is somewhere around 397, 395. We would like to go long on Indian Bank with stop loss of 390 or 389, a very strict stop loss. And you can go for the aggressive bet. Looking at chart, we are expecting target of 415, 420. Once the prices settle above 415, you can see a big rally on Indian Bank. So that is our first pick from PSU Bank. Second pick is Union Bank. Union Bank is also similar pattern to the Indian Bank. Currently, we are seeing that prices has formed a cup and handle pattern and giving a breakout from that. Recently, whatever the price corrections happened, the prices has taken a very good support at 50 days moving average. And since last 2-3 days, we are seeing a significant volume moves with high delivery marking. So Union Bank is also looking good at 90 rupees. We would like to go long at the current market price. Keep a strict stop loss at 85
Right.
and look at the positional way this trade. And if you are able to holding for next 2 to 3 months, you can see a significant move on Union Bank somewhere around 105, 110 rupees kind of. So Indian Bank and Indian Bank and Union Bank both are from the PSU space.
Right. And there is absolutely no let up by bulls on the Nifty. 125 points higher now in pre-open trade at 20,118. So the GIFT Nifty Q is coming in strongly. And remember, this is a gap up of 122 points after a 6-day rally where the Nifty is moved from 19,200 to 20,100. That's a 900 point rally in 6 trading sessions. You need to be very, very careful because now the index hits a very, very strong resistance on options data as well as on technical charts. This gap up most likely by professional traders will be used to book profit, and as Kiran very rightly said, 19,800, 19,900 is a point of re-entry. So we'll buy the dip if that happens, but for the moment it's a Goldilocks kind of a situation on the Nifty. It's settled 20,110, 113 points higher. And let's look at the contributing stocks. Okay, HDFC Bank 0.5% higher, 1640. One good thing is that all 10 index heavyweights have closed in the red as far as pre-open trades are concerned. Taking it away is L&T, 2% higher, 2951. We've seen the Nifty Bank settle 300 points higher, 45,900. Remember, this is what Kiran also suggested, that traders will now focus on Bank Nifty rather than Nifty, because Bank Nifty has yet to hit a record high and other indices have already joined the party. Coming back to the Nifty, Reliance 0.33% higher, 2483. Infosys 0.4% higher, 1482. Axis 1% higher, 1010. ICICI Bank 1.2% higher, 990. So this is how pre-open has settled. I just want to see the top gainer in F&O. It's Power Grid, L&T Finance Holdings and L&T. Coming to you, Kiran, a very precise view on L&T, record high. What's happening?
So looking at last night turbo current market price, the stock price is giving a very good breakout since last couple of days. And looking at current market price and the buyback news, we are suggesting whatever dip is coming somewhere around 2800, it would be the buy opportunity. Keep a stop loss below is 2800. If prices fall below 2800, then we can see only a profit booking move or maybe time correction. Since then, whatever dip come, we would like to go long on Larsen & Turbo with the stop loss of 2800. And looking at price, we likely to give a target somewhere around 3050 to 3100.
Fine. That's the view technically on L&T. Let's go to Mr. Chokalingam. Mr. Chokalingam, what's with L&T? The buyback was announced, 2 or 3 fresh orders came in, and that infra space began buzzing with fresh buying interest. Your view on L&T, sir?
One can hold on to it because of capex push by the central government, and also a lot of state governments have announced. In fact, there was a statistics that combined capex of state government also, shooting up substantially. And again, the growth rate is GDP growth rate is likely to be around 7% for FY24. So all these augur well for L&T. So those who already bought can hold. But buying, one can see any opportunity from possible small correction in the Sensex Nifty, and that time one can buy stock like L&T.
Fair point. Pre-open trades have settled. I'd like to highlight a few names apart from the very obvious ones that are there in the market. Let's look at KNR Construction. News coming in that a lot of mutual funds bought in fairly strong block deals in yesterday's trade. Weekly high, monthly high, 284.45 is what we see on KNR Construction. Steel Authority of India, a government company, now in 3 digits, 101, fairly strong traction there. KEI Industries, they make electrical towers, 2613 there. This is also fresh record high. A few other stocks coming into focus from the PSU basket. One is Engineers India, 163. They help design oil refineries that IOC, BPCL, HPCL put up. So that's a very, very strong parentage from the public sector side, as also a strong order book. What else is ticking? I'm not going to take any views on IRFC. Of course, it's opening strongly up. We're just going to mark prices. This is a very, very dangerous time to somehow enter at current overstretched numbers. What else is looking good? Bank of India, 100 rupees. This is what Kiran mentioned. Laurus Labs and Shyam Metallics. These are some stocks that are buzzing in pre-open trade. Nifty settled 113 points higher, fresh record high, 2100 coming in a whisker. Bank Nifty settled 323 points higher, 45,900. IT index is 0.3% higher, 32,760, and the broader NSE 500 100 points higher, 17,753. Nifty, NSE 500 are at fresh record highs, as also our mid cap and small cap stocks. I'd like to also take a look at high beta. These are stocks that set the sentiment in the market and are also looking good. CDSL 1410, 1.37% higher. BPCL 141.45, 1.5% higher. Mannapuram 1% higher, 150. Bank of Baroda 0.8% higher, 204.40. We'll continue this discussion with both our guests, Mr. Chokalingam and Kiran Jani. Kiran, your view on BHEL, a fabulous rally that we've seen from 80 to 141. Are the charts overstretched? What are they talking about?
So looking at BHEL, daily chart or intraday charts definitely looks like overstretched, or we can say the momentum indicator is trading at in extreme overbought zone. But if you check monthly chart or weekly chart, it's a decade breakout. The last time we have seen 100 rupees price in 2016. After that, BHEL never crossed this 100 rupees price mark. So it's a decadal breakout, or we can say 5-10 years of breakout. So whatever dips is coming, it's a buy, but it is for the long term. If you are talking about the swing trading or intraday trading, we would like to avoid BHEL, or we will request or suggest people to book profit or keep a stop loss somewhere around 835, a very strict stop loss to 835. If 135 level is breakdown on a daily chart, then there are chances that we can see a sharp profit booking move on BHEL. So at current market price, we are not recommending any buy on BHEL. If dip is coming somewhere around 120, 155, 15, 120, 115, that would be the level we can enter into the BHEL with the stop loss below 105. Otherwise, at current market price, just keep a stop loss of 135 and ride this rally. No fresh buying at current market price.
Fabulous, very practical advice coming in from Kiran when it's trading hyper velocity stocks that have exceeded all charts. So it remains a buy for the long term, but at this level you don't need to chase. Okay, ladies and gentlemen, we are getting ready for pre-opens for the opening quotes. Remember, 7 Nifty indices have hit record highs in pre-open trade. It's the time to rejoice, but also to be extremely cautious. First ticks coming on the Nifty, 85 points higher. It's above R1 and it's above R2. So the gap up is 85 points higher, and immediately you see selling pressure coming in from professional traders who are booking the 2100 call as also the 20,000 call. We'll wait for the Nifty to settle. The Bank Nifty opening 175 points higher, 45,744. In the green is the IT and the broader market. Okay. Shifting immediately to index heavyweights. I just want to see what L&T is doing. 70 points higher, 2961. HDFC flat, 1633. Reliance flat, 2476. What's Infosys doing? 0.6% higher, 1485. So it's Infosys, L&T, Axis and ICICI Bank that are powering the Nifty. ICICI Bank at the moment is 1% higher, 989. And Axis Bank is 0.5% higher, 1006. Let's immediately face the F&O space and look at the gainers there when it comes to the F&O market. Just a moment, please. Yes. L&T Financial Holdings is the top gainer, 133.85. There was a block deal here in pre-open trades. L&T 3% higher, 2980. Let's look at India Cement, 1.4% higher. Hindustan Copper 1.4% higher, 169. These are initial trades. Birla Soft and Steel Authority 1% higher each. So this is how the broader markets are coming in. And let's look at the NSE 500 before I take the first query to our guest. NSE 500, what are top gainers? I'll have to mark the railway space. 6% higher on IRFC, fresh record high, 90 rupees 35 paisa. ITC 8% higher, 106. ITI. This is the telecom company of the government of India. 9% higher, a blowout trade, 163. SGVN, Central Bank, Indian Overseas Bank, all 3% higher in front of trade, 78.95, Central Bank 42.10, Indian Overseas Bank 36 rupees. RVNL 2.5% higher. Okay, so this is how the markets have opened. Let's look at the Nifty when it comes to anything which is beyond the index heavyweights. Okay, Nifty 50. Just a moment, please. Yes. Hindalco 1% higher, 490. Metals are shining. JSW Steel 1.8% higher. Tata Steel 1% higher, 132.20. So it's the metal space within the index taking it away. Nifty 85 points higher, consolidating at that 20,080, 20,100 range, and it's ICICI Bank's day. Coming to you, Kiran, first. What looks good in the chart, or are you on the selling side?
So looking at index, definitely we are at on profit booking size, but looking at the stocks chart, we are expecting some good breakout stock can be played as a buy opportunity. So first, as a stock specific, we would like to go long on Indigo. If you check the Indigo daily chart, there is a clear-cut breakout candidate, a falling trendline breakout. With that, on intraday charts, we can see a double bottom pattern breakout also panning out on Indigo chart. Current market price is 2,500. If any dip is coming out at even a current market price, we would like to go long on Indigo. Stop loss somewhere around 24.90 we can keep. And this trade is for the 1 or 2 days trade. Looking at current market price, definitely we are expecting 50 to 80 rupees rally on Intergroup Aviation or Indigo. So we would like to go stock specific rather than the index specific. And if anyone would like to have a trade on index, then we are suggesting Bank Nifty will be the great index to trade. Reason being at 45,500 calls are call writers are in pressure now because market is straightforward open with the gap up, and we can see a large number of open interest is stuck at 45,500. If you check current market price and the 45,500 call, 2 lakh open interest is outstanding over there. So we can see some short covering moves is coming on Bank Nifty. So if any dip comes or even at current market price, we would like to go long on Bank Nifty, keep a stop loss below 45,500 very strictly in this aggressive call. If market keeps sustaining some at 10 o'clock at 45,700, then we can see target of 46,000 by second half in Bank Nifty. So index specific Bank Nifty and stock specific Indigo would be the trade.
Right. Fine. I'd also like to highlight some profit booking that's happening on defense counters, which is very, very healthy. Now, let us see when this dip is bought into. But for the moment, shipbuilders, Masgaon Dock, 2% lower, 22.24. Cochin Shipyard, 2% lower, 11.74. BEL, 1.6% lower, 142. And Garden Reach Shipbuilders, 1.3% lower at 886. Large parts of the defense space, after shooting through the roof for the last 3, 4, 5 weeks, is showing some kind of consolidation with minor profit booking. Also, let's look at high beta, where there's something in the red. We see BSE 1.3% lower, 1351. Chalet Hotels, BHEL 0.5% lower respectively. We have Canfin Homes and Bank of Baroda flat but slightly in the red. So that's what high beta is doing. Within the PSU pack, there is no let up in the railway space. So defense taking a pause. The railway stocks continuing their unrelenting move as far as Ircon, IRFC, RVNL is concerned. Let's look at the metal space. Coming to Mr. Chokalingam. I know, Mr. Chokalingam, you look at markets fundamentally. But anything that catches your fancy in the metal space, sir?
Yeah, one can look at national aluminum. Medium to long term prospect is good. Lot of cash, lot of expansions, and also the backward integration to coal. So it makes a lot of sense to buy and hold national aluminum. That is a one stock. Otherwise, copper outlook looks good, but all copper stocks have gone up substantially beyond what fundamental would suggest. And one continue to sell Hindustan Zinc because zinc metal alone has not recovered at all as compared to metal like copper in the global market. And also 100% of the shares are pledged. And cash is already depleted to a large extent. So the kind of special dividend they gave, it's very difficult for them to replicate that experience. So this is my broader outlook on metal space.
Okay, I'll again show some prices which are taking fairly strongly. Lupin comes back into action. It's the top gaining pharma stock in the F&O space. 1161 for you, 2.7% higher, accompanied by a 1% increase in open interest. What else is doing well? L&T we've already touched upon, 3% higher, fresh record high, 29.79. I see pharma stocks taking Syngene, 852. I see Zydus Life, 637. A lot of green ticks, and the Nifty Pharma Index 0.75% higher at 15,427. These are really good moves, and immediately let's touch base with Kiran. Kiran, you had mentioned Glenmark as your top pick before markets opened, 0.6% higher, 814.60. Let's reevaluate Glenmark again. And anything else that catches your fancy when it comes to pharma stocks?
So looking at pharma indices chart or even a pharma stock, we are expecting a good rally in pharma in upcoming time. So coming on Glenmark first, so Glenmark already has showcased a 80% kind of a open interest jump in last 5 days, and the price has also raised by 6%. So we are expecting a good move in Glenmark coming continue. So at current market price or at any dip, we would like to go long, keep a stop loss below 800, and we are expecting a good rally in Glenmark somewhere around 840, 850 in upcoming time. So it's a little bit a positional call on Glenmark. You can also buy for the intraday as we discussed in the morning also. Apart from Glenmark, we are like to highlight one more stock, that is Divi's Laboratory. Divi's Laboratory traded very underperformance, and it delivered a very bad returns in a couple of days. However, we are seeing a good rally ahead of higher bottom since May month, and stock price were trading at 3,000. Now it's trading at 3,800. Looking at daily chart, the flat horizontal line breakout, the momentum indicator is also trading into the bullish zone. And looking at the open interest data and current market setup, we are expecting a good rally in Divi's Laboratory. So it bit a contra trade. Whatever dips is coming, we would like to go long. Inverted head and shoulder pattern breakout at 3,700. So at 3,800 or even at 3,700, that is our accumulation zone for this 100 rupees. Keep a stop loss below 3650.
Right.
And looking at the daily chart or maybe weekly chart, we are expecting 4,000 kind of a level in upcoming 1 month. So Divi's Laboratory is our favorite pick. We have already recommended to many clients, and we are expecting positional target of 4,000.
Fair point. Let's again view the Nifty index, 20,074. Exactly 10 minutes into trade, so 2 5-minute candles have formed. 80 points higher, 20,077. Remember, the resistance the first resistance is at 20,047 initially before markets open. Now that is acting as a very strong support. Within the Nifty, everything is clicking for the best. Farmers there, IT is helping out today. The advanced decline ratio within the Nifty is 35:15. What's clicking? All banks are in the green. 3 plus 3, 6 banks led by ICICI Bank within the Nifty are in the green. All auto stocks except for Hero Motors and Maruti, which are minor in losses, are in the green. All 5 pharma stocks, Divi's, Sun, Reddy, Cipla, Apollo Hospitals, making up the Nifty, are in the green. All technology stocks 3 plus 3, 6 are in the green. Metals are shining except for Coal India, Tata Steel, Hindalco, JSW Steel are in the green. That's how the Nifty slated. Very, very strong support seen at 20,047 on the charts. Let's see how it goes during market hours. I'd also like to see the graph of Bank Nifty. Somehow I'm not able to screen it in front of me, but for the moment 156 points higher, 45,734. We'll somehow manage to grab that. Let's look at the FNO space, the top gainers here. Very interesting things coming up. LNT taking it away 3% higher, Lupin 3% higher. A precise view on Lupin, Kiran. This has been one of these very, very sharp outperformers in the pharma space. It was at 850 rupees, somewhere like 19th of April, and 1161. Of course, we've seen fantastic days, 2200 on Lupin somewhere in 2015. But what are the charts telling you in the medium term for this stock?
So considering the Lupin chart, if you check the daily chart, there was one bearish pattern is formed. However, we can see the failure of that bearish pattern, and now whatever the target of that bearish pattern become a bullish target for this Lupin. On daily chart, we can see a fairly resistance placed at 1145. Today, the stock price has crossed that resistance with the heavy volume, and if you check the derivative data also, there is a big amount of open interest being built up at current market price. So looking at current market price, if we check for the swing trading, it is a very good stock. We can go long at any day for at current market price 1160. Looking at current market price, 20 days moving average is placed at 1100. So our positional stop loss would be at 1100. And considering the monthly or a weekly chart, the double bottom pattern breakout is coming on monthly and weekly chart. So target is placed somewhere around 1500. So this is quite a long-term view I am giving. So if at current market price or any dip you want to go long, you can go long, keep a stop loss of 1100, and you can wait for the target of 1500. So that's the call for next 6 to 8 months. Coming to the intraday or maybe 1 or 2 days time frame, you can go long at current market price, keep a stop loss of 1135, and looking at...
Right, sir. I'll have to interrupt you here. We are joined by another guest, Mr. Dilip Bhatt. He's a market expert of phenomenal stature. Dilip bhai, welcome to Market Today, as also to Business Today Television. What a pleasure to host you, sir, and a fantastic time. Describe us what you feel as far as sentiment is concerned, and how do you see markets at current levels?
Well, I think the market has scaled the mountains of apprehensions, worries, overvaluations, and yet scaled a new top. Despite not getting enough tailwind by way of FI support, markets have done what they have done at the moment. No doubt valuations are expensive. So some of these events which have really propelled the markets to a new high makes us, as usual, feel a little more apprehensive, and we remain very cautious. I think markets are trading significantly above their valuation. Longer term basis, yes, they certainly will be very good, but in the short to medium term, the valuation is something that one has to negotiate. So my suggestion is that one should be extremely patient and need not be in a hurry to commit in the market. So I feel that overall there is a lot of buying in the mid caps, and that also is a cause for worry, because despite the fact that they are good, but to take a 3 to 5 year view on them is not always easy. So overall, all said and done, long-term basis, yes, but short-term, one should remain extremely careful and cautious.
Dilip bhai, you've mirrored my thoughts completely. The fact is that, large parts of the market are run by this huge liquidity that's coming in via systematic investments plan. A lot of our common friends who are fund managers tell me it's common to expect 500 crore coming in a single fund. It's, this kind of rally I haven't seen in mid caps and small caps for a very, very long time. Of course, it's time to be cautious. How much money would you take away from the table? How much of profit would you book when it comes to mid caps and small caps?
So as what I said, that for the first time after a long time, we are seeing that a lot of funds are getting committed to the mid cap and the small caps, and there is definitely a mismatch in terms of the demand and supply for the mid cap stocks. Well, I think as far as the mid caps are concerned, one should focus on the cash flows of the mid caps. If the cash flow from the operations look pretty good and interesting, then one should think about probing further and investing on a longer term basis. Otherwise, extrapolating the current performance for next 3 to 5 years is always a very tricky part to adopt. So I would say that I would be booking profits in the mid caps in a very, very, at least 30 to 40%. I would prefer to book profits, sit on the cash, and wait for markets to become a little more reasonable. But you never know, markets are always on the extremes. But having said that, I would still prefer to book about 30-40% of profits in the mid caps and wait on the sidelines. And I feel that markets continue to be very, very expensive in the mid cap segment.
Yes, this is sage advice coming in from a person who's seen at least 40 years of bull and bear phase in the market on the Lal Street, and it's a pleasure to hear you, Dilip bhai. Now tell me, what will you do with this cash? How long will you remain in cash? And are there any other avenues that you would want to deploy, something like a gold sovereign bond fund, or no?
So good question and not easy to answer, because once you take the cash, what do you do with that? One is, I think, on a longer term basis, one should adopt an SIP approach to this market. So you deploy the money very gradually in the market over a long period of time. And the second part is gold as a part of asset allocation, I think is definitely a must, without any doubt. One should allocate some amount of gold property in the overall asset allocation. So that's what I would do with the cash that one has. But otherwise, it's very difficult to encash completely, as what we say. But gradual investments on an SIP basis is something which is worth considering for the markets at these levels.
Fantastic. Dilip bhai, we've often seen pockets of extreme overvaluation as also reasonableness in the market. How would you see, these smaller PSU banks coming back into focus after a series of mergers and acquisitions that the government put in place over the last 5 years? We've seen, these banks coming back into the limelight. Central Bank of India, Bank of Maharashtra, J&K Bank. These were, the 1990s greats, which had a terrible decade and a half and are now back on the radar. Do you think they offer value, or they ought to be dismissed?
So what my experience tells me is that generally the pattern of the market is something like this. When the sector is doing reasonably well, which is what the case is with the banking, books have been cleaned up. So now we are finding the core NII growth and the core NIMs coming in for the bank. Now the question is, as the pattern shows that when the frontline bank starts becoming a lot more expensive, you start going deeper into the banking sector, and that's where you select some of this. So relative valuation always comes into play, that some of these banks possibly may offer an opportunity as compared to some of the frontline banks, especially in the PSU sector. But as what I always said, there is enough risk for going into that, because it's very difficult to re-rate some of these banks immediately, but maybe on a longer term basis, next 3 to 5 years, possibly yes. But right now they are certainly trading in the an expensive category. So I would not be in a hurry to buy some of the banks which you have just mentioned. I would prefer to wait and watch.
Okay, Dilip bhai, like I said, it's such a pleasure to listen to a cautionary tale when valuations and prices are shooting through the roof. Thank you so much, Bhatt Saab, for sparing your valuable time and giving us this classic advice that when everybody is buying, you should be on the other side of the trade, booking profit comfortably, moving into cash, and then getting back into the markets via the SIP format. Thank you so much, Dilip bhai. All the good luck to you as far as markets are concerned. Thank you so much, sir. Okay. Coming back to the Nifty, profit booking continues. We've seen the first support level, which is R1, being taken out by bears. So profit booking is seen from 20,100 levels to now 20,030 levels. So 70 points have been taken away from the first 20-25 minutes of trade. There's a very strong support coming in, as also the fact that the gap that was there because of the Nifty opening 110 points higher, that is now slowly getting filled. This is classic buy on dip kind of a situation. Let's get back to Kiran. Kiran, would you analyze the first 20-25 minutes of trade on the Nifty for us? I see some support at current levels 20,020. What is your chart saying?
So looking at 15 minutes or 30 minutes chart, the price are trying to fill up the gap, whatever the gap has created with the gap up opening. So I think we should still wait for some more 20 to 30 points dip on Nifty. 20,000 will going to be a psychological support. With that, you can see a major open interest built up on put side and the call side at 20,000. So 20,000 to 19,980 will be the support for the intraday point of view. We can try a long at somewhere around 19,980 to 20,000 zone with keeping a stop loss below 19,930, and we can see closing above 20,000 only. So whatever dip is coming, we should try to buy with the stop loss below 19,930.
Okay, that's the view as far as prices are concerned. But decent profit booking. If you see the daily chart of the Nifty, it was the 7th day of the rally, which took root from 19,200, went up all the way up to 20,100. So new players are likely to come in, but for the moment I see a bit of red as far as the indices are concerned, as also the fact that across the board we see some profit booking happening, which is something really good. Markets were really overheated. If they take back something from the fantastic rally that they had given to us, then it's okay, which means that existing players have booked profit, moved the profit into their bank, and have given an opportunity to new players to come in and take the market higher. Let me just give you some prices which are there on the Nifty. Remember, the first advanced decline ratio when the markets opened was about 35:15 on the index. Now let us look what it stands at the moment. Okay, it's reverse. 33 stocks are in the red on the Nifty, just 17 are up. So like we mentioned in our pre-open commentary, 20,100 will be used by the bulls to book out on the substantial gains that they've made over the last 6 trading sessions. And this is exactly what Kiran had said, that he'd rather concentrate on the bank Nifty than the Nifty, because the Nifty looked overstretched on the charts. Coming to bank Nifty, the chart is in front of you. The index is still 108 points higher, 45,680. The high is 45,820, and at the moment at 680, which basically means 20 plus 20, 140 point move from the intraday top that we've seen. So that's how the bank Nifty is placed, and it's very, very ably supported by ICICI Bank and Axis Bank. Kiran, I wanted to come to you. What do you think of Axis and ICICI?
So looking at daily chart of ICICI Bank, there was a resistance place at 980 and it crossed with a gap up opening. So looking at daily price chart, a clear cut breakout from recent price correction or time corrections, definitely with high volumes, and also we can see the good amount of open interest is built up with the prices rising. So clear long built up is there. So if any dip is coming on ICICI Bank or even at current market price, we would like to go long, aggressive long. We can take with the stop loss of 970. And looking at chart in a day or two, we can expect a rally above 1000 for definitely. So for the target of 1020, we would like to go long on ICICI Bank. Coming to the Axis Bank is also similar chart pattern. We can see a continuous chart pattern breakout on daily price chart. Cup and handle pattern is breakout. So we would like to go positionally long on ICICI Bank at current market price, or any dip is coming with a stop loss of 980. And looking at chart, we are expecting a rally of 1050 on Axis Bank. So both charts are looking bullish. We can go long.
Okay, now two things have happened. Axis Bank is at a record high. We've seen it crossing into 4 digits, 1005 in front of you. The intraday high was 1007. Very, very bullish comments coming in from Kiran on Axis Bank. ICICI Bank, I'd like to again focus upon. Remember, these are the two largest private sector corporate lenders, following State Bank of India, which is the largest public sector bank in India, as also the biggest corporate lender. Coming back to ICICI Bank, 4 days of fantastic rally. The stock moving from a low of 951 to 993. The all-time high on the stock is 1008 that we saw on the 24th of July. So you see a gap up today after the present chairman managing director of this company was confirmed by RBI for a 3-year further stint. So that's continuity and a nice move coming in on the banking sector. ICICI and Axis, and I'd like to point out L&T, Kiran. We've seen a digit change. Now the stock is above 3,000. I think the last time I checked, yes, the intraday high is 3,008, and of course now mild profit booking also hitting that. You would like to evaluate L&T again for us, Kiran?
So looking at intraday charts, there was a big breakout on L&T because of the news and all. Now, as you mentioned, that price has a digit change move. Now prices is trading above 3,000. Looking at 15-minute chart or maybe 10-minute chart, prices continuously making high top, high bottom pattern. It's clear cut uptrend. But still, as the indicator suggests us, it is in overbought zone. So I would refrain to buy at current market price. But looking at a daily chart or maybe intraday chart, we would like to go long at any dip. And so for the intraday purpose, I would like to wait for the dip at 2960, 2970. If 30-40 points dip is coming on LNT, it is a great buy for the intraday or maybe 1 or 2 days. And stop loss would be 29.40. So clear-cut view is buy on dips. 29.70, 29.80 will be the buy zone with the stop loss of 29.40. And looking at intraday or a daily chart, we are expecting prices to touch 3,050 to 3,100 in 1 or 2 days.
Fine. So that's how the markets are placed at the moment. Let me try and wrap this up in terms of indices as also the broader trend that is there. We've seen mild profit booking coming into Nifty after it hit a fresh record high of 20,117. Remember, this was the 7th day of an unrelenting rally on the index, which you've seen adding 900 points. Some of that is being taken back by the market. So from an intraday high of 20,117, you are at 20,011. 100 points have been taken away, and that was what was initially advised, that the gap up should be used to book profit, because you saw a very strong technical resistance and a very strong options resistance on both the charts as well as the option chain. So that's the Nifty. But it's the bank Nifty that is attracting traders on the long side. Frontline stocks such as ICICI Bank and Axis Bank are providing comfort and depth to the Nifty. HDFC Bank is also clicking in the green, 1634, contributing 5 points to the Nifty as also to the bank Nifty. So if three private sector banks which have the highest weightage are on the upside, the trade is on the long side as far as bank Nifty is concerned. Broader markets are now showing signs of sustained profit booking, led by the defense pack, and within the defense pack by shipbuilders. They had just turned to stratospheric levels. Mazgaon Dock, remember the last time I checked it was 2% lower, now it's 8% lower. Cochin Shipbuilders was in the green, now it's 10% lower. BEL 5% lower, Garden Reach 7.5% lower. We've seen 5% downtick coming on Astra Micro. So that's how the defense space is concerned. The railway space, the source of highest beta. RVNL now 8% lower, 172. Railtel 8% lower. Ircon 7% lower. Rights 5.5% lower. Remember, they had moved actually 5-7% higher, so the swing is huge. So this is the profit booking that is coming in across the board. Private sector banks are higher, but public sector banks down in the red. Nifty is in the red now, 7 points lower, 19,985. Nifty Bank has also slipped in the red. 500 index is also in the red. So like we had mentioned, the market will use this positioning to actually book profit and book that profit into the bank. So that's how the first hour, the first 45 minutes of trade have panned out, ladies and gentlemen. Stay on with the Business Today television, and we'll be giving you the latest when it comes to stock prices, stock picks, as well as quality, which is now getting, better and better. Yes, this is how the first hour of markets has been. Thank you, Kiran, for your wonderful views on both the index and stocks such as L&T, ICICI Bank and Axis Bank. It was a pleasure to have you, and we hope you continue your patronage of Business Today television. Thank you so much for your time, sir. So that will be all, ladies and gentlemen. We've seen very smart profit booking coming in. Now the index is 42 points lower at 19,950. Let us see when the buy on dip emerges. But for that, thank you from my side and from my team. It was a pleasure being in touch with you. What a glorious day to be a part of this wonderful journey that's unfolding on Dalal Street. How do you rate sentiment after this successful completion of the G20 event?
Really, it was a class apart, and it showed the world that India finally has arrived. It is a moment in the sun, and the G20 clearly, I think, showcased that. So I think overall the mood in the nation is very positive. First for the Chandrayaan, and thereafter we had this G20 event. So on the whole, I think sentiment, the feel-good factor is at a multi-year high, as I see just now, and even